If you're running your own show without forming an LLC or corporation, you're a sole proprietor. Let's break down how to handle your money and taxes smartly. First up, what exactly is a sole proprietor? It's simple. If you're earning money through your business activities and haven't registered your business formally with your state, you're a sole proprietor. Imagine you decide to mow a neighbor's lawn for cash. The moment you get paid, you've just stepped into the sole proprietor club. And yes, that income is taxable. The IRS considers all income taxable, so keep that in mind. Legal registration is here to support you every step of the way. Now, how do sole proprietors pay taxes? They file taxes differently than corporations. As a sole proprietor, you file a Schedule C with your personal tax return, rather than a separate business tax return. This is great news because it's often less expensive and gives you more time to file, with personal deadlines hitting in April instead of March. What taxes do you need to worry about? You'll pay federal and state income taxes and a hefty 15.3% self-employment tax on your business income. You can reduce this self-employment tax by incorporating as an S corporation, but that's a topic for another day. Subscribe to our channel for more information. Here's the tricky part: understanding your business income. Your business income is the money your business makes minus deductible expenses. This isn't the same as what you pay yourself. The IRS doesn't see the money you take out as an expense. It's all considered yours. That means if your business earns $100,000 and you pay yourself $50,000, you're still taxed on the full $100,000. This can seem complicated, but we're here to offer our help as you navigate this process. Contact legal registration. Let's talk about paying yourself. First, keep your business and personal funds separate by using a business bank account. This is crucial for clear record keeping and helps if you're ever audited. Transfer money to your personal account when you pay yourself, but remember, it's your business's profits that get taxed, not the payments you make to yourself. Don't take all the profits for personal use. You need to leave enough money in the business to cover expenses and keep it running smoothly. Think of your business money like fuel. Without enough of it, your business could stall out. If you found these tips helpful, hit that like button and subscribe for more insights. If you need help with anything we've discussed, feel free to contact us. We have what you need. And remember, legalregistration.com is your go-to for all things business, with the #1 online incorporation services. For more information, visit legalregistration.com or call 877-955-7111 or check out our services online.